Greetings, members, one and all of the Salivation Nation. The case for $166 silver. Let's explore. You heard right. I'm going to be referencing an article here from Seeking Alpha that references soaring prices to triple digits. And that is the case that is being made in this article here by Anna Sokoludu. And silver prices to soar to triple digits. We're going to cover this as objectively as possible, but with a healthy amount of skepticism as well, as we look at this piece here and the arguments made. It begins by saying that the U.S. inflation is hovering near 30-year highs. In fact, it's about 31-year highs. After the recent inflation data published, the prices of both silver and gold have soared. Although they didn't really soar, they've gone up pretty substantially for a couple of days, but they've corrected themselves now. It's not typical of these two precious metals to react this way to inflation numbers exceeding analysts' expectations. In the author's view, this means that market expects inflation in the U.S. to get completely out of control. That's a pretty big leap to take, in my view, because of where we are and what the dollar means compared to other currencies out there, and also considering what is down the pike as far as a global reset. I believe it's going to not get out of control. They will essentially reset the dollar, but that is kind of leads to further analysis as we get into this. And so she's highly bullish for both gold and silver since they move in tandem, although obviously silver is much more volatile. She's going to focus on the gray metal. Interesting description. Most people refer to it as the white metal, but which is much more volatile commodity than gold, and that is very much true. And because of its upside potential compared to gold, many refer to it as gold on steroids. The prices of the two metals depends on central banks' monetary policies. Even more so is the dollar index, which obviously can be affected by what the Federal Reserve does. And there was a remarkable rally in the prices of precious metals we saw about in August of 2020, and both gold and silver are trading below this peak level. We can see by this chart for the gold price that we saw it go up well above $2,050, and now it's much lower. And we also know silver's price in history. We've seen it over the last couple of years here, last 5 or so years. We've seen the price really spike up to almost $30 an ounce, or just above $30 an ounce last year. The most obvious reason explaining why the metals behave this way is the market's expectations of the Fed's actions. Many analysts are betting that the Fed will tighten very soon. The central bank announced tapering at the end of November, and these actions seem to be absolutely necessary since inflation has reached 30-year highs. These are the necessary conditions to make gold and silver struggle. It seems, what is more, it's like the demand for the safe haven assets should be over. Coronavirus-induced lockdowns are over in many countries, although there are other mandates that are coming that are going to have economic impacts, such as vaccine mandates, mask mandates, and the like, and supply chain issues that are continuing to be looming in many areas of the world. That is why many economies do not need as much support, both from the central banks and federal governments. Well, I don't know where she's from, but here in the United States, they just passed over $1 trillion package for infrastructure, with only about $110 million of it really needed for actual infrastructure, and they're debating now passing another massive package that's going to mean more government spending. And we know that the U.S. economy has not fully recovered from the recession. As many observers say, we could be in an area of stagflation when unemployment and inflation coexist. We also have to deal with product shortages and an energy crisis to boot. In fact, China is in the stagflation period right now. The current situation is similar to that of the 70s to some extent, and that the U.S. Federal Reserve also began to fight inflation by raising interest rates. But unfortunately, inflation got totally out of control and was there for more than a decade. This turns out to be both a true gift for both gold and silver investors. But the problem is the silver prices were artificially manipulated. Initially, the Hunt brothers decided to hedge their fortune against inflation. They started betting against the paper money back in 1974. The bet was logical at the time. The growth rate for the prices of gold, for example, averaged almost 39% per year. And we can see here how that spiked up during that period in this chart. And then we can see here the increase. And look, 79 especially, 133.41% increase. The yellow metal is not a perfect hedge against inflation. According to the ANA here, this is because central banks usually step in to taper. At the same time, the demand for gold soars when inflation seems to be getting out of control. That's what the Hunt brothers decided to bet on. So the two silver bugs started buying physical silver and silver futures. And they borrowed heavily to purchase both silver securities and physical metal. So even at the time when the US dollar used to be worth much more than it is now, they paid billions of dollars. So the soaring demand made the silver prices climb to over $50 an ounce. And then we can see historical silver prices, which, by the way, are not adjusted for inflation, and how high they've gone. Adjusted for inflation, this chart is much more balanced. Note that back in 1980, in today's money, $50 per ounce would have been worth more than $166 per ounce. That's because in today's money, in 1980, the dollar would have been worth $3.36. The fun fact is that 1974 and 1975 silver was selling for just $5 to $6 per ounce. So in order to take advantage of the silver prices, some people were selling their silver coins and cutlery to benefit from the high prices for the shiny metal. Obviously, this did not help to cool the prices for silver, since less than a third of the silver market was not controlled by the Hunts via futures. Was not controlled. So apparently that means that they didn't have the stranglehold on it that they did later on. It ended when the U.S. government and the Fed decided to step in. The Hunts were prohibited to borrowing. Silver market participants, meanwhile, were not allowed to make bullish bets on silver. This is why March the 27th of 1980 became known as Silver Thursday. The prices for silver collapsed in just one day, from its high of $48.70 per ounce to the price crashed to just under $11 per ounce because the Feds stepped in there. So what this means in 2021 is it's not investing in silver, is saying that not investing in silver is a bad idea. She's saying the opposite. Silver prices have a much higher growth potential than gold, since the gray metal is much more volatile. This is simply due to the fact that investing market for silver is a much smaller market than that of gold. The market for gold is estimated to be $11.845 trillion. However, silver market capitalization is just $1.4 trillion at the time of the writing. And you get these numbers by multiplying the ground reserves for each metal by the current price per ounce. Small markets generally mean plenty of growth potential. I don't disagree with her there. When a large player steps in, many other market participants rush to get their share of profits, which, what is more, is many speculators borrow to invest like they used to under the Hunt brothers' Hunt. Creates further growth potential for silver. In the 70s, silver was not demanded as a green energy transition metal, but nowadays silver is a vital component in the production of solar panels and electric vehicles. The silver's conductivity and corrosion resistance made it a highly useful component for making conductors and electrodes. Every electrical connection an EV uses is silver. This is why every year the car maker's industry consumes 55 million ounces of silver. But the same principle is true for all consumer electronics powered electric batteries. Silver's needed to make these batteries, since when countries are getting environmentally friendlier, companies will start producing devices previously powered on gas, like lawnmowers and pressure washers with electric batteries. So yeah, we know the green technology is coming for sure, and we know that demand is there. But I will stop right there and insert this. When she says that, talking about how what's not there today is solar demand, but guess what was there and was used quite extensively that is not nearly there as much now, and that is photography. Demand for silver and PV compared to photography, they basically have switched places, but with a whole lot more silver in the marketplace now than there was in the 70s. And so that is the big difference there, which I think, trying to make that comparison, you're leaving out some crucial information there, is that there's a lot more silver that has been mined today. The technology and the diversity of uses of silver is only matched by the technology in order to pull it out of the ground, and the efficiency to pull it out of the ground, especially when it's mined as a byproduct of other metals that are in far greater demand, like copper, zinc, and even lithium to some extent, and some of these other metals that are out there, and silver is mined as a byproduct of those. So moving ahead here, if we take this to the logical conclusion here, she's saying that there's several scenarios for every investment. Central banks matter the most. It's quite possible for the Federal Reserve to act in a timely manner and get inflation under control. But unfortunately, it's not just the money issue the Fed has to fight with. Actually, it's the only thing a central bank can cope with, but nowadays we also have to solve the problem of product shortages resulting from supply chain disruptions. This puts plenty of additional deflationary pressure on both consumers and producers. And we know that that is still an issue today, and for sure, that is going to put pressure on prices. We've already seen it, especially with premiums, and that's just it. I've talked about this and just very recently, that because of supply chain issues, there's not the demand for silver because they can't get it to, they're not even ordering it because of other supply chain problems in order to get products to the consumers. So that means that the silver demand has actually shrunk because of these same reasons. And anyways, going back to the supply shock, started in February 2020 in China. There was a demand shock followed by a global economy entered lockdown. We all saw how vulnerable the supply chains are all over the world. Shortages of essential pharmaceuticals, medical supplies, and other essential goods showed how vulnerable the supply chains are. The lockdown and the U.S.-China trade war have caused some sort of economic nationalism. This is why companies all over the world are facing greater political and economic pressures to increase their production levels in their countries of residence. While creating more jobs, it is also widely expected businesses would stop relying on risky supply sources, stop relying on lean manufacturing strategies that involve keeping low levels of inventories. Many businesses cannot meet these expectations. And so that is why some of this stuff, especially with microchips and rare earth metals, and happening in Taiwan. And we know this issue now with Taiwan is a great geopolitical risk there with China. And so this is something that is coming into play that does not necessarily, I believe, equate to the argument she made here. But let's take a look at her conclusion, and we'll draw our own as objectively as possible. Anna admits here at the end, it's a hard task to predict the future. The economic situation all over the world is changing very fast. But my base case scenario is that silver prices will surge to new all-time highs. In fact, the price of $166 per ounce, a maximum reached in 1980 adjusted for today's inflation, is quite possible. Indeed, not much is needed to move this small market. The fundamental indicators also suggest silver prices have plenty of potential to surge. I agree with her, the market is small compared to gold and other asset classes out there. But also, you have to understand is that there's more silver in the marketplace, and the demand and the market itself is much more complex than it was in the 1970s. So, yes, the price of $166 an ounce is possible. In fact, it's even quite possible, but it is highly unlikely given today's climate and even given the climate of the 1970s. If we reinsert ourselves back into that climate, how many kind of Hunt Brothers situations are there out there? That's a once in a lifetime thing. And it's a very unusual anomaly, just like the silver prices spiking in 2011 was an unusual anomaly. I believe the best thing we can hope for is double-digit silver numbers that get us around the neighborhood of where we were back in 2011. In other words, I'm talking $35 and $40 an ounce. That would be a reasonable suggestion and a case to make for $35 to $40 silver given the climate we are in today. That means that silver's still undervalued. That means some of these arguments, I believe, are legitimate. But nonetheless, there's a lot of working against the spot price of silver as there is for it. And there's also premiums that you have to take into account that are changing and shifting and evolving. Silver is moving in now into a situation where it's becoming a little bit less loved, as I believe some of the Wall Street silver members and the Silver Squeeze movement are feeling a bit jaded that silver is now, as of the recording of this video, moving in the opposite direction, and moving in an opposite direction at a fairly substantial pace back now with a 1% drop today under $25 an ounce. I didn't think this would happen. I thought we would continue to see at least stable and sustained prices moving upwards. But the correction has now moved in the opposite direction right now, which leads us back to her conclusion. The really thing that I think we can take away from this thing is it is very hard to predict the future. With that being said, I'm going to be stubborn and still be bullish on silver by the year's end. I'm sticking with my prediction of $30 an ounce. We'll see if that holds true. But nonetheless, there's where we're at on the markets. I hope you enjoyed this video. Let me know your thoughts in the comment section below. I want to encourage you to please rate, share, comment, and subscribe, and end this video by extending a multitude of gratitude to you all.